Ocha. All right, good morning. Welcome everyone to episode 24 of Mortgage News Live, coming to you from the very heart of sunny London, although it's still a bit chilly. Thank you for joining us and me in my little cupboard, so apologies if it's a bit echoey. Thanks as always to our sponsors, MPowered. We have another top show lined up this morning. We'll be discussing, of course, the market generally and looking deeper into the subject of specialist lending. Whatever the hell that is, we will find out. So what the market then over the past couple of weeks? Well, we've continued to see swap rates falling. 2-year money now stands at 3.7%, and 5-year money has fallen to 3.38%, which has led to more lenders cutting rates, some twice in the space of a few days as the battle for business intensifies. Too much alliteration. We do now have 2-year fixes below the magical 4% level for the first time in ages, but with a budget looming and lots of negative talk, are we starting to see more activity as buyers decide to finally get their skates on? There are reports that at the top end, million plus market, that is stagnating pre-budget, but the mid-tier levels are increasingly active. Buyers do know that house prices are likely to continue to increase, albeit slowly, and with demand intensifying next year with lower rates, that could put their dream home slightly out of reach. Many investors believe it will soon cut interest rates more aggressively. The Bank of England will. Goldman Sachs, HSBC and UBS predict a faster pace of easing, starting not this month, but in November. However, economists anticipate resilient services inflation this week, which could temper the central bank's actions. So despite the US Federal Reserve's recent rate cut and the European Central Bank's second reduction, the Bank of England could remain cautious. But they do, as I said, expect a quarter-point cut in November and December, with Goldman Sachs saying they expect rates to stand at 3% by the end of 2025. But we're not here to listen to my nauseating noise, but my lovely guests. So who have we got this week? Joining us are Amanda Sims-Rees from MPowered Mortgages, Product Manager. Welcome back, Amanda.
Good morning.
We love having you on the show. Narinder Gill, second time as well, who is Associate at Corico Commercial. Welcome, Narinder.
Hello, good morning.
Adam Stiles, welcome from Helix Financial Planning. Lovely to have you, Adam.
Thank you very much.
And last but not least, Kim, LinkedIn McGinley.
Morning, everyone.
It's delightful to have you back, Kim.
Thank you.
And Kim is, of course, from Vibe Finance. So where are we going to start today? Now, you all work in slightly different markets to the mainstream. So how have you found and how have you seen your world adapt to changes since the start of the year? I know we talk about the residential market all the time, but in the sort of slightly grayer areas, how have you seen things change this year? Kim, over to you first.
Yeah, I mean, the year started off, obviously, we didn't see any kind of Bank of England reduction. Swap rates have been volatile for the first half of the year. It has been an easier year in a sense since last year, obviously, with the doom and gloom last year, the continuous rate increases. We have seen it be very stop-start this year in relation to consistency of, people either waiting for that first reduction and then holding off still because we've got the budget around the corner. So it does feel very stop-start. It's been hard work. So as with the rate reductions for other brokers, you're continually quoting multiple products for a client to give them all the options available in the market that we're in still, with the high rate, low fee, lower rates and high fee markets. So yeah, that's kind of all I can really describe this year as. It hasn't been easy by any means, different to last year in a good way, but yeah, I'd like to see some more rate reductions before the end of the year by Bank of England and get this budget out the way.
Yeah, Amen to that. Adam, what about you?
Yeah, I kind of echo quite a lot of that. A lot of people just waiting and seeing and kind of not moving, and everything just seems to take forever. I've not seen it this bad in years. I've been in the industry since 2007, and I would say this is one of the worst years of people just delaying things and seeing what happens. As Kim rightly said, you're constantly quoting and re-quoting with no guarantee that they're even going to do anything. And that does take quite a lot of time. If you're doing quotes on, say, commercial or bridging or development, there's no sourcing system for that per se. Whereas on resi and buy to a little easier, but then you've got the nuances of the case to make sure it fits before you send quotes out. Obviously, you've got product transfers as well. So, we're kind of poaching ones that are 6 months out, but then, every week you're checking that they're the right ones, and you seem to be changing them every week, which again takes time, especially if you've got a number of deals in advance of those 6 months. So there's a lot of treading water, so to speak.
Lorinda, similar story for you. Obviously, we talk quite a bit, so I know a bit about what you do, but tell everyone how your market.
Definitely. I think this year has been a better year than last. I think the positives that have come out in the area that I work mostly in, which is the SME developer market and investor market, we're seeing the positive effects of the softening of rates, affordability for home buyers and investors. So that's really tapering back into that end of the market. And with rates softening now on dev exits, on bridging loans, for example, it's slowly snowballing into hopefully a really good finish to the year.
So you'll see more deals starting to work now that they might not have done before.
Yeah, and there's a lot of developers that require quite sensitive finance pieces at the moment, which 3, 6, 9 months ago just wouldn't work. And we're now starting to see some of those deals resurface or developers pick up the phone.
And Amanda, with swap rates falling as where they are you finding it easier to price deals now and products, and certainly for that type of market?
Absolutely. Well, it's more a case of the continuousness of it, and it's just I can't remember a time like this. I'm sure as everyone else will see, when the shelf life of product is reducing right down. Literally weekly we're repricing, we're constantly looking. At least this week we know already kind of got that indication of what's going to happen with the Bank of England base rate, but still we've got other impacts as well. You've got Fed, you've got CPI coming out on Wednesday as well. All of this is impacting, and we know there's no rest for the wicked, is there? We've just got to keep on looking at it, and it's constantly repricing, seeing where we are as well. You think you come out of a market leading rate, and by the following morning someone else has come out with that, which again for you guys must be incredibly hard to keep on track of that, let alone as us lenders wanting, when you've got our particular our hero spots, our particular sweet points which we kind of look at, it's incredibly hard to keep on top of it. But it keeps us busy anyway, that's the main thing. No complaints.
Yes, good. Yeah, it would be nice to have a little bit of like a level market for a little bit, so we can all pause for breath and actually do business rather than just rebroking all the time. So specialist market, that is a term that I hear loads and loads, and then it means different things to different people, doesn't it? When we talk about the specialist market, what does it mean for each of you? Because it might be different for each of you, actually. Adam, when you talk about the specialist market, where do you think that focus is in on?
I think it depends where you're coming from. Some people would just define the specialist market as non-high street if you're looking at buy-to-let and resi, whereas others would say, well, actually, it's not even buy-to-let and resi, it's bridging, development and commercial. So it's a bit of a grey area, but that's where I believe it would be if depending on where you're coming from.
Yeah, Kim, same for you, or is it more specialist for you?
Yeah, for a good few years, I kind of thought specialist was just anything outside residential mortgages, if I'm honest with you. Specialist to me, the specialist market was the investor financing, whether it's bridging, development, buy-to-lets. Now, obviously, we've got both sides of the business with the residential side. It is, like Adam said, anything outside of the norm, really, your high street lending. But for me, holistically, specialist finance is more the investor side.
Yeah. Lorinda?
For me, I think the specialist market, looking back, say, as far as the pandemic, really come into its own with, at the time, limited company, SPV purchases and refinances and incorporations were at the forefront of investors. I think over the last 18 months, 2 years, that specialist market has almost created some pockets of additional specialisms within it, with landlords, say, having a bit of adverse or some missed payments or rental void periods. And I think it's quite exciting to see lenders within the specialist market really standing out for their own niches and pricing on risks, for example. And there are areas within the specialist market that aren't tier one, but they're there for a purpose. You know, you've got lenders like Quantum, for example, who clearly do what they do very well, but they're not your traditional buy-to-let lender. So I think it's great to see over the last year how well adapted that area of the market's been.
Yeah. But from a lender perspective, it's interesting actually, Amanda. Do you consider yourselves a specialist lender, or are you just a mainstream tech lender? See, I'm interested to see how lenders perceive themselves.
It's interesting because when you look at when we're categorized as a lender, we are put under specialist.
Yeah,
But
right.
I would actually, would say we are, very much focusing on residential. We also do at times focus on buy-to-let as well in that space, and the SPVs and everything. But our core is on the residential side, and it's looking at that as well. And I think it's very much about, when you're talking about specialism, as Navinda said, it's that niche as well. So finding that niche area, and I think that kind of blends into this whole discussion, isn't it? Specialism, niche as well. But for us at MPowered, we fall into, I would say, the prime lending space, but we do have niches on there and some great USPs which kind of move us a little bit more into that grey area and be able to help those who may find they can't be assisted with a traditional high street bank.
It's very interesting, all of this, because as brokers, and if you look traditionally, we always operated in the greys. Always. That's where brokers added value. So all brokers were basically specialists, weren't they? It was a case that you couldn't be done by someone going in and meeting their bank manager who couldn't sign it off. It was then going to a broker, and that's where the skill of the broker came about. And then just before the credit crunch, it all became vanilla. And broking, actually, I think everyone lost the skill. It's my view anyway. Everyone lost the skill of actually being a broker. They just became almost order takers, and it was vanilla business. And let's do quick sourcing. Oh, that's top. Yeah, we'll go with that one and that one, that one. That ain't broking. So actually, the skill after the credit crunch has sort of come back now, hasn't it? In terms of actually broking and actually finding a deal and operating in those greys. And you're right, they're in all these little specialist areas have come, they've sort of exploded, haven't they? Whether it's buy-to-let or
the bridging market, particularly.
The bridging as well.
Yeah, there's an abundance of lenders coming to the market, but you'll often find the ones that quickly find their feet or being most supported or well supported are the ones that have identified particular products like refurbishment or conversion finance. Those lenders over the last 18 months have seen record numbers of lending, and you've almost got to look at some other lenders who haven't evolved their product offering as much and seen clearly business levels aren't as good on their part.
So where do you see where are the growing opportunities in this area? And do you get a sense that brokers are equipped to deal with this, Kim? Where would you say the opportunities? I'm a broker. I've done mainly prime business. Where should I be looking?
I think diversification at the minute is quite important for businesses, because whether it's on the specialist or the resi side, like I keep going back to the inconsistencies, no one wants to be losing business. So even for us, we're kind of thinking, right, what else could we be doing? Which is why we've entered the residential market. I think that at the minute in the market, we're kind of guided by what clients are doing, more so the specialist side. So a lot of people are adding value. So, you know, with the labour coming in and long-term investments and their strategies are changing, we're seeing a lot more bridging inquiries, refurbishments. And I think as a broker, obviously that is quite a nice sweet spot to get into, should your experience be there or willing to learn it, because for obvious reasons of not just helping on the bridge, but obviously the exit as well. So I definitely see that continuing for the foreseeable to be quite a big gap in the market. There is a lack of knowledge still. So you've still got clients trying to do it on term lending, where clearly it should be a bridge. So we're having many, many conversations educating around that. Did I answer the question? I'm kind of thinking there was 2 questions to me, but I might have only answered one.
That's fine.
Okay.
I think that, yeah, it's finding the opportunities, and do you think brokers are equipped to do that? Do we need more specialists in our market?
I think this is a really difficult question, because I think we always welcome competition, and no matter what form, you know, there can never be too many brokers. I think it's dangerous where we're still unregulated in this side of the market. You've got many great brokers working in it, but there are many, many brokers that are not equipped, advising on the wrong products, and there's no repercussions because it is unregulated. So I always get a bit torn on this one. I think with the right level of training, and a lot of what we do, I don't know if you guys agree, it's on the job training as well. You can talk about specialists in a training course and things like that, but actually implementing it. So you need, I think with the right team around you, it does need brokers to come into the specialist market, but to do so with best practice at mind. I think that's the biggest thing.
Adam?
Yeah, we've always done every type of property finance. And for me, one of the things that you do, as Kim said, you learn on the job. So if you see a lender that you've never heard of, pick up the phone and find out if they've got a real estate department, a lending department, find out what they do, what their nuances are, how they're backed, who are they. You need to constantly be educating yourself as a broker, because if you sit still, you're going to sink. And I think with, look at Truss's budget overnight, the firms that solely operated on buy-to-let lending just switched the lights off because you couldn't operate in that market for months. And then, with rates as they were, PTs were sometimes the only option. So, half your income's gone on that side. So you have to educate yourself on the bridging, development, commercial side. Also, it's about duty of care to your client. You can't just be a development broker who has no idea how to get you off a development loan, whether that's a bridge, whether that's buy-to-let finance, or indeed, I've had lenders call me and say, should we lend on this? Because we've no idea if Halifax or someone might get a resi mortgage on this. So you need to constantly be educating yourself, because rate and etc. That it's criteria led. That's where you add value to your clients as a broker.
Yeah, Dorinda, you agree with that? I mean, we're quite open at Corica. We've seen people come in and try and do specialist and not have what it takes to actually do it.
It's really hard. Clearly, there's been a need to dip into this area of the market with other revenue streams sort of tightening up over the last 1 or 2 years for brokers. I think Kim made a really good point about the governance and regulation in this side of the industry. There's clearly the need for some kind of oversight function on a local level, say internally, with lesser experienced brokers, and just ensuring or speaking to someone within the team that places this type of business regularly, just making sure that you haven't left anything untouched, because those small details quite often are the cause of bigger problems down the line. I think Adam,
sorry, on that, sometimes I think the lender has a bit of duty of care to actually do their due diligence on who's passing them the business, and lots of them do, but there's still, I think, scope there for, if they know that the broker's got a reputation for whatever that might be, is that the sort of business they want to do with that person?
No, you made a good point about working collaboratively with lenders. That's two-way. picking up the phone to underwriters, credit managers, and lending directors, and having those conversations about exits on short-term finance from day one. Making sure there's absolute crystal clarity on multiple exits. Primary, secondary, and even a tertiary in some instances, because things can change all too quick in this side of the business, and you don't want to be left in a position of risk or misadvice to a client when there are other things to consider.
So what other advice would you give brokers who are looking at getting involved with parts of the specialist market?
My advice would be, sorry.
No, please, Kim.
Go for it.
My advice would be, do it for the right reasons. Prepare is hard work. We've already said this. Everything that we do really is manual, and a lot of it's in here. You learn, and the thing that I would say about specialists, and some of the lenders will agree with this, is that criteria is there, and there are boundaries that we know that we can flex on and push on. And it's going back to what you said was really important, Monty, is how are we adding value as a broker? And it's not just flicking on a sourcing system and doing, there's so much more to it. And I would say that for anyone looking to get into it, I absolutely love specialists. It's all I've ever really known. But it's hard work. It's not easy. So, but yeah, you have to keep the customer in mind the whole time and do what's right. So that, just prepare to educate yourself a lot. It's a lot of hard work, but I love it.
So obviously, Kim, I know you quite well, and I know you, Narinda, very well. And sometimes I bump into both of you, and you're either way up or you're way down. And I know it's very similar in the residential side, but bloody hell, in the commercial specialist side, it really can be a roller coaster, can't it? How do you deal with that, Narinda? How do you deal with that?
It's a really good question.
Swearing at me.
You've always got to numb yourself to the highs and the lows. That's what I've learned to do over the last 18 months, and just make sure that you put the client first in all circumstances and giving them the right advice. Quite often, sometimes not what they want to hear as well. There was a touch on conversations earlier about, for example, renovating properties on term debt. Well, what are the implications of that? We've seen clients come to us being in breach of their facilities when you look at the piece in situ and it was taken out through a broker. So you think, well, what's gone on here? Has there been a misadvice or somebody not listening? But going back to your question, it's now, I personally don't get wrapped up in the high fee, big exciting cases, nor do I dwell on the smaller ones. Everyone's the same. Keep level-headed. I just work hard. Communicate with the lenders really well, because they're there to do business with you, and they want to do the right business.
I don't know. What about yourself?
Take away from the failures, the ones that didn't go through. Why did it go wrong? I think you need to look back on those as learning moments, and you fail fast, fail often. That's the only way you're going to learn. But as Narinda said, you've got to keep level-headed with this, and I think more so on bridging development commercial until the deal's done. Honestly, the amount of last-minute things you get, especially on bridging and things like that, it's just nuts. Whereas the reverse is true on resi and buy-to-let. Once you've got an offer, 90% of the time you're fine, maybe a bit more than that. Whereas the reverse is true on bridging development commercial. Things can come out the left field that no one can predict. But that's part of the journey, and that's it's far more interesting in my opinion than resi and buy-to-let, where it's but at the same time it is an emotional roller coaster. Sometimes you've just got to shut the laptop off and go for a walk.
Yeah, that's good advice. Yeah, we have had cases that have actually the money's been sent to the solicitor.
Yeah,
and it's done.
Yeah,
and it's not done.
I was hoping you want to bring that one up.
Oh, sorry, Narinda, was that one of yours? It's really interesting. I think it's something we learned very early on. I think to anyone watching who's thinking about specialties, and your point, Lorinda, is don't get too focused and just pulled in just to those big cases, because those big cases are hard, and they often, I mean, we've completed some that we worked on for over 12 months, and then it suddenly come in, and likewise, you've worked on it for 12 months and it never comes in. It's so
Nature of the beast.
Yeah.
Can I add on to that as well? So
Of
one thing, when new advisors come into the business, it's I'm sitting here laughing because I think we can all name times where we were that new keen broker and you had that, we call them unicorn deals, because we work in an industry,
Yeah.
people like to have
We
a
used
little
to call them the pie in the sky deals.
yeah, because now we know that until they complete, it doesn't mean anything. So
Yeah.
your emotional detachment does kind of work, but you have to go through that process at the beginning. But we know that we need to focus on the bread and butter as well. And that is your smaller deals and your repeat clients and the portfolio landlords that are building. And just to very quickly touch upon the question about how we stay sane, basically, because I'll be honest with you, there's many times that this has nearly broken me, this industry, over the last 4 years. There's been times I think I would go and teach, I don't know, yoga somewhere than rather be a broker for doing what we're doing. But at the same time, I really love, and I think you have to love what you do to be a broker at the minute. I've only been doing it for 6 years. And all I've known really in this time is your COVIDs, your Liz Trust, the inflation, whatever else has been going on. But I actually, there's a few takeaways for me from this. The resilience it's built in me is insane. I genuinely think aliens could land tomorrow and I would not be surprised. And the other thing that I would say as a broker, I've had to become disciplined. I've had to prioritize myself, whether that is shutting the laptop, scheduling in family time, because you can't pour from an empty cup. And I think each of us can probably name multiple occasions over the last few years where we have nearly burnt out, or you could work and work and work, couldn't you? There was times I'd be up till 2 a.m. or early in the morning, and it does take discipline. So, and I think it's a hard job. It's a hard job out there at the minute.
So, Amanda, you've been sitting here listening to all this. I'm just interested from a lender's perspective. How are you adapting your criteria in the market generally? And do you feel that you're changing quickly enough with the changing needs of borrowers? And what about this specialist marketplace in itself? Do you see yourself maybe merging into some of that in due course?
Gosh, there's quite a lot in there.
Yeah, I tend to do that. Sorry, I just
no, that's fine.
I just
that's
make
fine.
shit up as I go along. So
it's really interesting to see, what's been happening with the market. If we look at this, we're called the specialist lenders within residential, looking at about 125 billion, looking at UK finance figures for last year on those specialist lenders in the residential space. And you can see that over the past, so far this year as well, it's almost like the high street lenders and the regional lenders as well have gone, oh, there's obviously business there. Let's see what we can do. And also with competitiveness on price, there's only so much we can do on pricing it. When you're pricing down, you're literally just above swaps. We're all here to, even though we're here to do the best what we can for our consumers and help people get homes. That's what is in the heart of what we do. We've still got that commercial aspect behind it as well. So to keep that commerciality, we've got to then be looking, and we're constantly as a lender looking, where can we tweak? And we have been making tweaks. One of our leading USPs, when we're looking at how we can help doctors, recently qualified doctors, how we help foreign nationals as well. We've been leading in this space. Others have now come into this space as well. We've got those niches, but we've got other areas as well, which we're busy working along whilst doing all these rate changes as well, going, well, what else can we do? What can we do to expand? And also, it's also about, well, where can we see people are struggling as well? So even though we are residential, we're very much aware about what's going on in the market. And a key thing we always get is affordability. That's just at the start of it, isn't it? What's the first question? I'm sure you'll find everyone asks is, how much can I borrow? How much can I lend? Be it specialist, be it, prime and vanilla, it's that key question. And that's, of something, which we're busy working on at the moment, is how can we assist on that? Are we doing the best we can and giving people, as long with all the constraints as well, making sure we're lending, making sure we're making right decisions as well, that's right for consumers as well. So we're always evolving and looking at that. So it's always busy going on in the background. So I hope I covered all those points there.
You covered them all very well. And also, actually, while we're talking, you were talking before about there's been some interesting data out around defaults and that type of thing. Do you want to go into that? Because obviously that's part of the specialist market, isn't it? The sort of the near prime.
Absolutely, that's one of the key areas, isn't it? Near prime, subprime as well. And when you're looking at specialist lending, especially on the residential side, there's that set market that's always been there. There's those set lenders that are there who do fabulous jobs at helping those who may have had blips along the way to actually get them back on track. And unfortunately, sometimes they don't get back on track. There's more specialist lending for that as well. But what's been, we all know what's happened in the market over the past 12, 18 months. And the impact that's been having as well. And just looking year to date on what's happened as well, looking at using some of these sourcing systems, you can start to draw out some interesting data. When you're looking at adverse now, 49% of all the adverse inquiries are on defaults. And that is really interesting, isn't it, to see that has spiked.
Yeah,
it's good to see that some of the others has kept low, your big black marks against the repossessions and that, but that the rise in defaults is becoming apparent and starting to come through. And this is where, if you've got these defaults, where would you be placing these customers? I think it's now seeing as we do have, and within our criteria, we do have allowance for some slight defaults, nothing too recent, but within 3 years we can look, small defaults we can be looking at. And I know there's other lenders out there who are high street who also do the same as well, kind of that what was seen as maybe being more specialist with any kind of adverse now is coming across into the residential high street as well.
Yeah, absolutely. It's really interesting, all of that. Where do you guys as brokers think that the lenders are at in the specialist market? Are they doing enough for you in terms of innovation and criteria? And feel free to shout out a couple of lenders who are doing it well.
I think Perenna's an interesting one. They are completely built around USPs entirely. And they've done their research. There's others that have tried it, but they've not done their research properly, and it's not worked out. But even the provincial building societies, they're known for the way that they look at cases and some of the real USPs they've got there. But I think the last few years have shown more USPs and more creativity than the last decade. For new entrants to the market and the way they look at cases and everything being more criteria led. I think it's a great place right now for innovation.
Interesting. Kim?
I think being in the specialist space, look, there's normally always a lender for something, and there are the more specialist ones. I think Narinda picked up on Quantum earlier, who definitely have a place in the market for lending on the quirkier stuff. But for me, I think just getting a deal through at the minute can be proving quite challenging. And I think as far as innovation and AI goes and technology, I think Lend Invest are clear runners at the minute for us on buy-to-lets, just from purely the online, what they're requesting is quite minimal. It's just they seem to have a very slick system. And yeah, so for us, they're great for innovation that way. But yeah, just getting the deal through is a bit of a challenge.
Yeah. Narinda?
Just thinking and listening to comments, Amanda touched on something I thought was really important, and that was, what can we do other than price? And I think that's exactly where the specialist market comes into its own. And what I've loved seeing over the last year, 2-3 years, is that open dialogue and communication between the lenders certainly that I work with, and being able to feed back on product design, enhancements or closing of certain areas of criteria, and really helping those lenders help us. I think that's a great tool that we have as specialist brokers, and the ability to speak to product design, product managers, like we are now. I think it's really, really good, and I welcome it, and long may it stay.
It's interesting looking back at couple of the comments that have come in. If you do have any comments or questions, please do. Educating your clients that it's not just the interest rate, it's about how you pay it off. There's a huge market for educating people. They're looking for help, and then you can show them how it can work for you. That sets you apart as a broker. And very much in the specialist space, it's not just about the interest rate, is it? It's about gearing, it's about how much you can borrow, it's about how quickly you can pay it off, especially if you're going into a bridging loan. It's about the exit. So there's so much more, isn't it, than just what's the cheapest bridging rate?
Deliverability as well. You can't,
100%, yeah, great point.
The cheapest ones are quite often not the most deliverable, but yeah.
David reckons mortgages for aliens, Kim. There you go.
I'm open to anything, it's fine.
Imagine a KYC on
that. Sorry, Narinder, were you going to say something?
Well, I've seen a comment. Somebody's made a great point about the CPSP qualification.
Yes, good point.
Which is amazing, and a great addition to the industry, and alongside the NACFB certification. They're brilliant. I've looked into both. Haven't registered for the NACFB one as of yet, but the LIBF, London Institute Banking and Finance qualification is brilliant. I've sat it, looked at papers, and it's definitely something I would encourage a lesser experienced and experienced individual in this market to take out. I think it should be the norm and standard.
Do you reckon I'd pass it?
We have CMAP.
Do you reckon I'd pass it? I wouldn't, would I?
He's staying silent.
His screen's frozen.
Screen's frozen.
It froze.
All right. Yeah. Silence screams louder than anything.
But there's things that I've seen questions in there, and as much as you think, like on CMAP, hang on a sec.
Yeah.
You do actually go and have a look at the manual and think, I'm not too sure.
We put one of our guys on the LIBF course, and he's CMAP qualified and has been for about 3 years. And it's interesting when you put a non-reg case in front of him and not saying it, just to see how he will tackle it. And it's amazing how far he's come, and it's quite nice to kind of bounce ideas off each other. So, yeah, I concur with Narinder there. It's a great qualification to have if you're looking to go into that space.
Yeah, that's good. And I just want to touch on the buy-to-let sector, because obviously that's a big part of what we now call the specialist market. How is that changing? And I guess what we're seeing, the press is always about people are leaving the industry, the buy-to-let sector in droves, landlords are selling up. But I know you and me have talked about this a lot, Narinder, in terms of it's becoming more professional, isn't it? And we're seeing a lot more limited company. There's race for yield, so maybe HMOs and student lets. And we're not really seeing landlords come out of the sector, are we?
From my point of view, I mean, I'm part of many like Facebook groups for property investors, and there's always people looking for other people's opinions. And I think what doesn't surprise me, you've got so many varying opinions at the moment. The general consensus is that, people are moving to high yielding, so social housing, HMOs, and things like that. There are still a lot. There is a lot of anticipation for what the budget will bring in relation to landlords. I think we're all expecting it to not be great. But I do think they're changing to more yield based, and that there are obviously a lot of nervous people. And I think you've hit the nail on the head. it's becoming more professional. And I think that was always the government's intention, maybe, with going down this route, is to wheedle out your first time landlords or the 1 and 2 buy-to-let landlords. So yeah, I find it interesting. I'd say it's difficult at the minute. It is difficult, and I think that's a reflection of what we're seeing in the market. But again, they're just diversifying into new strategies. So yeah.
Adam, is that you seeing all that?
Yeah,
as well?
it's the hobby and accidental landlords that are. They tend to be the ones that are dumping their property. If there's £100 in it in a month, do they want the headache? No. Quite a lot of them are loss making, particularly in the southeast where yields tend to be lower. And the stress tests are more punitive on getting to the leverage that you want. But it's especially for someone who may not be a professional landlord, when you start seeing 3, 4, 5, 10% arrangement fees, and what that looks like in pounds and pence, that doesn't make sense to a lot of people. Whereas the professional ones who have been in it for a long time and understand income stabilization and rental voids and etc. on maybe a portfolio, then that's more palatable in the longer term, because they understand it. But yeah, we are seeing people sell up because they just don't want the headache of fighting over a few £100 a month. And then obviously and quite often those are in personal names, so they're being taxed on turnover, not profit. And then they're looking at, well, okay, how do I mitigate this? Well, you could do an ovation to a limited company, and then there's the implication of that as well. And then it just becomes a bit messy for those that aren't professional. So as the guys have said, it is becoming a more professional asset class, where it's much harder to make the easy money of days yonder.
And Narendra, you've seen, so those dinner party buy-to-let landlords, I call them, you're selling up. A lot of those properties going to professional landlords rather than first-time buyers, as envisaged.
Definitely, we've seen pockets of the UK university towns, for example, where we're acting for either existing clients or new clients who are purchasing stock. We see quite commonly on sales memorandums and conversations had with the purchasers that they're buying this from another landlord. 9 times out of 10, they've been personally held. So we are seeing that area of the market quickly dilutes. And Adam touched on a very good point just recently on, it reminded me of an article I read a few days ago about landlords now having held on to stock for too long and now running at a loss with the proposed CGT changes that are coming in the budget. And they've been hit hard on the turnover tax, as Adam put quite rightly. And now with them not, well, the 17th of September, we can help Bridget, by the way, if they sell their property. But nonetheless, there's going to be an exodus in that corner of the market very quickly, particularly with the CGT plans.
So I think we've learned that actually coming into and becoming a specialist broker is not just as easy as turning the page and today I'm a specialist. You've got to do your research, you've got to get experience, you've got to do your reading, you've got to envelop yourself in the world, really, don't you?
Yeah.
Blimey, I tell you what, time flies when you're having fun, isn't it? So give me then, each of you, any final words of wisdom for either brokers or borrowers or lenders in this about the specialist market. Adam, what are your final
Mine
words
would be
of
for
wisdom?
brokers: keep learning, learn from your mistakes. If you fail fast, fail often, you learn a lot from that. Always be honest. Your integrity is the only thing that you can carry through. But yeah, keep learning, picking up the phone, asking questions. Always be curious.
That ABC. Narendra?
Similar to what Adam just mentioned on learning, I think it's important for borrowers and brokers to have the right teams around them. And particularly with investors in today's market, having the right broker or brokers around you, particularly if you're looking at different pieces of finance, be it development, term debt, or your own residential mortgage. It's having the right people around you, as well as tax advisors And for brokers, again, if it's a piece of finance you're not comfortable with but want to know more on, maybe partnering up with a suited or experienced broker and having that agreement between you to work collaboratively together, because that's only going to be for the advancement of your own learning and for the betterment of the client.
Yeah, good point.
Absolutely.
Kim?
I would say this is more to clients and brokers actually, and it's managing expectations in a way that being realistic. So specialist finance is not a quick 20-minute source on a system. And I think I've learned definitely this year, there's been occasions where I've overpromised, completely stressed myself out in trying to go back to people. But also we're in a market at the minute where clients, their expectations are high for us to go back quickly. So I just think there's education needed on both sides, and just to for clients to give us a break sometimes. We do our best.
That was a plea from Kim. Amanda?
Well, I'd say from a lender's point of view, just reach out to us. We've got amazing AI tools on criteria, so we can make it swifter and able to help you, especially on high street niches rather than more specialists. But use our AI tools on criteria. They're there to assist and to make it quickly find out, can we or can't we help with your particular client.
Love that. So thank you very much. I think we are out of time now. And we have learned that there is a mortgage for everyone, no matter what, even if you're from a galaxy far, far away. Kim has you covered. So thank you to our guests. Thank you, Amanda. Thank you, Narinda, Adam, and Kim. We have started shouting out Star Broker of the Week at the end of each webinar, so please tag MPowered on socials. When you've seen a broker go above and beyond, you can nominate a star broker on the MPowered website. And today, there's a big hello to Eva Brzeska. I hope I've pronounced your name right, Eva. We're pleased to announce Eva as our star broker of the week, TikTok star in her own right. Eva shares daily informative videos to educate consumers while earning praise for delivering exceptional personalised support to her clients. Keep up the amazing work. And remember, we are bi-weekly, so not here next week, back the week after with another amazing show. And finally, remember, you can listen to all of these on Spotify. If you've enjoyed it, I've been Andrew Montlake. If you haven't enjoyed it, I've been Laura Loomer. If you don't know who Laura Loomer is, Google her. Until next time, have a great week.
Thanks, guys.